Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So the strongest move higher was that initial bounce off lows. The second move was somewhat more gradual, and the third move was even slower still. So it almost hugged the trend channel as it was going higher on that third wave of buying. So not only did we have that target zone from just under that previous high back there, but you also had trend exhaustion coming into play as it was coming into that 92 level. So that helps confirm that setting that target in that zone was going to hold pretty well as at least a temporary target level. It might have changed momentum based along there and had a stronger break higher, but in any case, you could have very easily predicted that there was going to be some sort of reaction off of that zone whereby you would have a larger price correction that would at least break the channel from that uptrend. And it would depend upon, what your larger time frame objectives would be, say on a weekly or monthly chart, whether or not you really wanted to hold for that, or if you had the shorter term objectives and were just swing trading, that you would want to go ahead and get out of that entire position at that zone. But just based upon what you could see on this chart alone, you had that initial setting of the target based upon the momentum move of that V low and the confirmation of it with that third rally as it progressed into that target zone. Correction periods are going to be another thing that's going to be important to pay attention to. So correction periods are basically times of the day, and they can also be times of the year, where the market as well as individual securities are most likely to correct in some form or another from the price move which had been in place heading into those correction periods. So what this means is that if you have something that is, say, in a downtrend or a very gradual pullback, and you're looking for a break higher, and it breaks higher, but you're wondering, how far is it going to be able to continue that move before it reverses or before it hits resistance and turns around, then pay attention to what the upcoming correction periods are. For those of you that trade Forex, what you're going to want to pay attention to are not just the intraday correction periods, but also the ones that take place outside of normal U.S. market hours as well. So, for example, 2 o'clock in the morning, 3 o'clock in the morning, these are strong times where the market is going to have a reversal or it's going to fall into a trading range. So let's say you had a setup that had been in place since 2 o'clock in the morning. Maybe as a breakout from a trend move or from a gradual trend pullback. Then the next major correction period on the smaller intraday charts is going to be 3 o'clock in the morning. So you would want to be very, very cautious within about 5 to 7 minutes ahead of 3 o'clock and look to pay attention to what the upcoming resistance levels are going to be, because the chances are there's going to be some sort of reaction or slowdown going into that correction period. Now, the major correction periods intraday are as follows. When you're looking at all sessions from about 2 o'clock until 8 o'clock, well, really 2 o'clock until 7 o'clock in the morning, and these are Eastern time zones, then on the hour, you will see these major corrections take place. So 2 o'clock, 3 o'clock, 4, 5, 6, 7, 8 not so much. Usually it's 8:30. From 8:30 onwards, they fall on the half an hour into the open, and then they go on 15 minutes and 45 minutes past the hour until 11:15. So you would have 9:45, 10:15, 10:45, and 11:15. And then into the afternoon they switch and they're on the half an hour. So you have 12 o'clock, 12:30, and so on. Typically 12 o'clock, 1 o'clock, and 3 o'clock in the afternoon Eastern are going to be the strongest ones for the afternoon. But basically, those are the major times that you're going to see reversals take place, often within a minute or two. Now, just correction periods alone are not going to be a major reason for having a target level at that place. You want to see where support and resistance levels are, what the momentum moves are, basically tie in each of the other building blocks to look at the overall picture. Let's go back to this chart here that we were looking at with the EUI on the 5-minute. And let's say, for example, that going into this high here, we had a major correction period coming into play. Let's say 2 o'clock in the morning. Typically then, as that corresponds to it, it's going to have a higher probability of giving you a larger reversal, a larger correction off of that zone. It might not necessarily turn the entire thing around. That's going to depend upon the momentum. If the momentum shifts into a correction period, it's going to have a stronger chance of holding that correction period. This move here actually took place from 2 o'clock, right here, until 3 o'clock in the morning, which almost exactly corresponded to this high right here. So by forming that slower momentum to the upside, it basically served as the start trigger of this breakdown here for that continuation breakdown. And what you can see is that this would have been the support zone for an equal move on that breakdown. So these correction periods are going to help trigger a move, and they can also help end a move. So this reversal coming here basically found support going into 2 o'clock in the morning, and it wasn't able to continue. But a lot of times you will see these strong moves actually begin at 2 o'clock in the morning, meaning you will have breakouts or breakdowns that come at 2 o'clock. You'll have pivots off of highs or lows that come at 2 o'clock, that sort of thing. So that can really help give you an idea of where you're most likely to see a counter trend move to begin. Now I'm going to go ahead here and take a couple of questions. For anybody that would like to reach me, you can do so at http://www.tonihansen.com. Make sure you spell my name correctly or I won't get it. But that's a really good way to reach me is through the website. Let me look here and see what we have for questions. There's a question box over in the lower right-hand corner. So if you have any questions, be sure to post them there. Okay, one of the questions is, let's see, what are the practical tools needed for chart trading? Really, there's a lot of things that you can use for chart trading, but I like to keep things really simple. I know a lot of people will use a lot of indicators and such, but I basically prefer to keep my charts as plain as possible so that I can actually see the price action. So it's a lot more difficult to really see price action if you add a lot of indicators. So when you're looking at like what are the practical tools needed for chart trading, basically if you can get moving averages on your charts and candlestick charts or such, those tend to be the ones that I will use. Fibonacci levels work extremely well in the Forex market as well as the futures market. They're not as accurate on stocks, so if you're trading stocks, it's not one of those necessary things, but things like that can add confidence to what you're already seeing on a chart. So basically the more types of support or resistance you see at given levels, the stronger they're going to be. So if you have something coming into a moving average support, at the same time you have it coming into a correction period, at the same time you have it coming into a previous high or previous low, then obviously that level is going to be stronger and be more likely to get a strong reversal off of that zone than if you don't have that.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.